Visual. High-quality cinematic shots of Wall Street, private jets, briefly, and complex financial charts. Fast-paced editing. Narrator. Most people are taught to save. The 1%, they're taught to deploy. While the average person is worrying about their high-yield savings account interest, the ultra-wealthy are playing a completely different game with a different set of rules. Today, we're pulling back the curtain on the asset classes, the tax loopholes, and the psychological shifts that separate the rich from the truly wealthy. This isn't about get rich quick. It's about how the elite stay at the top. 2. The philosophy, velocity of money. Visual. Animation showing money moving in a circle versus sitting in a vault. The first secret is the velocity of money. While the middle class parks cash in a 401k and waits 40 years, the 1% keep their capital moving. They don't want dead cash. Key concept. Instead of just saving, they use leverage. They borrow against their assets to buy more assets without triggering capital gains taxes. Graphic. A simple chart showing compound interest versus asset-backed lending. 3. Asset class number 1. Private equity and venture capital. Visual. Logos of famous startups. Uber, Airbnb in their early stages. The biggest gains aren't found on the S&P 500. By the time a company goes public, IPO, the 1% have already made their 100 times return. They invest in private equity. Explanation. Discuss accredited investors. Explain that the elite get access to pre-IPO deals and startups that aren't available to the general public. Takeaway. This is where they take high risks for astronomical rewards. 4. Asset class number 2. Real estate, beyond the family home. Visual. Modern commercial buildings, multi-family complexes. For the 1%, real estate isn't just a house, it's a tax shield. Through things like depreciation and 1031 exchanges in the US, or similar structures in Europe, they can essentially earn millions in rental income while paying near zero in taxes legally. Deep dive. Mention REITs, real estate investment trusts, and syndications, where they pool money to buy $50 million apartment complexes. 5. The moat, alternative assets. Visual. Shots of fine art, Sotheby's, luxury watches, and vintage wine. When the stock market crashes, the 1% often stay green. Why? Non-correlated assets. We're talking about blue-chip art, rare collectibles, and even carbon credits. Assets that don't care what the Federal Reserve does with interest rates. 6. The invisible edge, tax optimization. Visual. Icons representing trust funds, shell companies, and foundations. It's not about how much you make, it's about how much you keep. The elite use family offices and trusts to pass wealth down through generations, avoiding the death tax or inheritance tax that wipes out most family fortunes by the third generation. Disclaimer: this is for educational purposes. Always consult with a certified tax professional in your specific country. 7. Conclusion: how to invest like them. Visual. Transition from complex charts back to the narrator or a clean background. You don't need $1 billion to start thinking like the 1%. Prioritize assets over liabilities. 2. Focus on cash flow, not just appreciation. 3. Invest in your financial literacy. Call to action. The 1% invest in information. You can start by hitting that subscribe button and checking out our next video on what's one asset you're betting on this year. Let us know in the comments.